Boom, we are alive, ladies and gentlemen. Thank you for joining us today. This is Tio and the Arcane Bear. Now, the title of this thumbnail at least is like make or break, and I'm here to tell you it is basically unimportant. If you follow a good strategy in the investment world, you could pretty much buy and ignore the price, and if you at least write in the fundamentals of the asset choice that you were picking, any price is a good price. If you rewind back into Bitcoin at Bitcoin's all-time high of $1,000 and you thought to yourself, oh, well, damn, I screwed that up. I bought Bitcoin at the all-time high. What would you do next? You should actually just keep buying, average your price down. And over time, again, if you got the fundamentals right, the payoff was extraordinary. So what we're going to do here is actually start with the crypto fear and greed index, understanding human emotion and human psychology in the investment world. And thesis is one of probably the most important and one of the most interesting aspects of technical analysis, realizing that price is generally speculation based off the wanton desires of the human nature and the supply and demand characteristics of the things that it is that those humans want. So because of that, one of the reasons why the fear and greed index is so powerful is because it gives us a general sentiment measurement of those who are in the market right now. As you can see, just the other day, we had a nice big dip down to around 47 point on the fear and greed index. As you can see here, we've actually fallen quite low. We went down all the way to 31 and we've hopped right back up to 44 as of today. If you give the year-long cycle here, you can start to see that this is actually just another area of accumulation. In my opinion, a lot of people think this is a dead cat bounce. I entirely disagree with them. I believe this is just one final LPS test before we shoot to new all-time highs and then probably conclude this bull market somewhere near the end of December. Now, again, if you go back in history, just let's go look at the max history of Bitcoin's price movement here. Pretty much any time you were buying in the area of fear between 20 and 40, you were getting a good price. And if you were selling in the areas of greed around 80 to 70, you were also getting a good sale price. Now, you could technically ignore all of the technical price analysis and focus on just the human greed and fear indexes, and you'd actually get a pretty good sentiment moving forward. Although, again, one of the things I like to point out is that you could pretty much ignore all of this and do what Michael Saylor does. For those of you that did not see this, actually, I could probably just jump into the private group. For those of you that did not see this, I really liked this tweet. Michael Saylor buys another $248 million in Bitcoin at approximately $48,000 per Bitcoin. Now, again, one of the important parts here to recognize is that when you see people playing this game, which is just the accumulation game, it should tell you something. It should tell you that if you're not playing this game, you're probably doing it wrong. Now, a lot of people go, well, Tio, I don't have enough money to spend like Michael Saylor does. Well, maybe it's because you are not doing what Michael Saylor is doing. And I actually think that this is the case. More often than not, what ends up happening, people try to take a different route to outsmart the market instead of the simple route is to do what the smart players in the market are doing, which is generally trying to accumulate more assets, realizing that the degradation of the inflation of the US dollar is going to continue, and therefore what you're going to see is an increase in all asset prices. Bitcoin just happens to be a special asset, so shout out to Michael Saylor for doing what we think all bears should do, which is just accumulate. I also want to take a look and start with fundamentals before we look at technicals on anything today. Class nodes data, one of the reasons we like to go over this particular chart is it shows us the amount of Bitcoin on the open exchanges. And every time we see the price fluctuate, the amount of Bitcoin on the open exchanges has actually decreased. If we look pretty closely here, it's decreased dramatically. Even in this last dip here, again, every time you see the price drop, you see a massive amount of supply leave the market here in orange. So here, let's take a look here, give a little bit more data. Boom, just like this. So on the 5th of September, big price drop, massive amount of Bitcoin leaving the markets. Price drop, massive amount of Bitcoin leaving the market. This is still extremely bullish. Fundamentally speaking, when you see prices drop and supply leave, that is a very bullish signal. So everything, both fundamental and technical, actually lead us towards a bullish scenario. We dive in, that's Soul Rise, we'll get to that one. So here's what we've been following for Bitcoin on the 6-hour chart. Now, one of the interesting parts about the SOS and the LPS phase here is, number one, The SOS had this massive volume spike up here, one of the biggest wicks we have seen. It wicked all the way up to $47,000 Bitcoin. And then the other day we had actually an equivalent wick, equal supply, down at the bottom here, and it wicked all the way back down to pretty much where that wick started on the other side. So here I thought this was kind of an interesting piece to note, is that you have an SOS with this massive wick to the top, followed by an SOS or an LPS with a massive wick to the bottom, again equated by equal selling and buying. This is how big players test the markets. They will buy, they'll shoot the price up just to test it, and then they will sell, smash the price back down to test it. This is the literal definition of the sign of strength and the last point of supply. Boom, just like that. So these signs of strength and last point supply are the other technical indicators that lead us to believe we are still in a very strong bull market. Although we do have a kind of a declining channel here, it is on much too much of a smaller time frame for me to really be interested in. And again, this, as you can see here, if I just draw green along each one of these tops, this is effectively the separation of the trading ranges. So the fact that we're getting caught in here is not unusual. We saw this a bunch last with Ethereum before it broke out from around $1,100 to the $4,000 range that it went at its high here recently, and back down to where it is now. So if we look at Ethereum, again, look, appears to be a nice SOS, bang, SOS, and then LPS. And this is a real test of the market right now. These backup phases are important because they make sure that whatever market and supply that is out there is really holding ground. A lot of the times what happens, because you're dealing with human psychology, is the people that bought up here will sell here, and then you get this drag down in price over the period of a few days. Now we could touch 2,800 here before moving higher, as you can see in the volume profiler. We do have a fair amount of we have a fair gap there, but in this bull market, we have often seen those gaps just not get filled. So I think that in the patience of the make or break scenario, it's really unimportant. I believe very strongly that the bull market is going to continue till December. I've stood by that thesis the entire time. Although I did think we would see maybe a bit of a deeper spring there in the last trading range. We didn't get that. So again, a lot of strong indicators that we are still fresh in this bull market. I wanted to go over, let's start with Solana here first. Solana was a beautiful example of a trading range, followed by the SOS and LPS periods. Not always easy to define, but obviously when the fundamentals are strong, here is your SOS and your backup, and then kaboom. This is the general motion we like to see. And again, notice the strength here. Number one, this was a very strong horizontal trading range. There was no weakness in this market in Solana almost whatsoever, which is really good to see. The first horizontal trading range that came outside of the box, which is known as the SOS and the backup phase, sent us into this very, very strong multiple 100% move outside of the trading range for Solana as well. Now, the reason I think this is important is because when you're really measuring and trying to gauge the entirety of the market, one thing that's important is to know that it's almost a uniform movement within the market. So even though you see explosions in different areas at different times, when you see a movement like Solana going into new all-time highs, that is not a dead cat bounce, right? And lo and behold, Serum actually hit a new all-time high the other day as well, breaking just over $14 on, I think, the wick of the candle there that came out, just into 14, almost into $14. But still around $1 higher than its previous all-time high. So now what we see, a horizontal trading range, SOS, backup, SOS, backup, SOS, or LPS, backup. They both kind of work. LPS, last point of supply, or BU for backup, is equivalent, effectively the same dynamic. So here, because we're seeing all this strength in the market, it's really a leading indicator that the depth of where we're going next is still there. I think a lot of people get concerned and scared because they are new to investing. And remember that the disease and the sickness of the early investor really comes from that over-emotional trading and the lack of education that really should be coupled with a good investment strategy. So one of the important parts is that if you know the markets are generally moved by emotion, it means your emotions are one of the most important parts in gauging what is going right or wrong in your strategy. And the easiest way to cure that disease and sickness is by joining our private group, as far as I'm concerned. We have a no risk policy. Basically, if you join and you're not happy for some reason, we'll give you a refund. And if you couldn't find alpha there, it's your fault. So we're happy to give you that refund. So why not go to arcanebear.com/private, sign up for the private group. Or if you would like, we actually started a new free newsletter as well, which you do get diluted versions of what we produce for the private group there as well. So go to arcanebear.com, check those out. Let's take another look again. Yeah, I like how it's funny, like people like Murray Dogood, who says redistribution. It's funny because this is someone who's probably never once studied the Wyckoff theory up until within the last few weeks, or maybe for the few months. And I love that they have opinions, but they're generally worthless. I mean, we could go over strong arguments about why that is the case, but generally anyone who's new to this, like we've been using these Wyckoff trading methods for almost 2 years now, and the majority of people are new at it. Now, I'm still new too. Two's like a little toddler and a baby, but I definitely think that one of the funny parts here is that you have newbie people who are like, we're in a bear market, that are clearly wrong. Oh, keep that volume down. And one of the reasons why they are clearly wrong is you just don't get new all-time highs in multiple assets inside of a bear market. That's just not how bear markets work. Thanks for trying, though. Welcome to the investment world, because you definitely sound new here based off those, let's say, layman comments. Let's take a look at 1inch. 1inch is an example of something I think I didn't, let's go with what I got wrong about 1inch. So we've been watching these nice rising gradient megaphone patterns outside of the box, right? We had it with Avlanche. Avlanche played out beautifully, brought us a multiple 100% growth. We saw the same thing with SRM, rising megaphone pattern right here before breaking out. We also saw it with Solana before Solana broke out as well, although it was a much tighter channel. One of the things I wanted to go over was the reaccumulation patterns. So, and what I think is happening with 1inch. So, I actually thought 1inch was going to produce this widening megaphone pattern, but now what it looks like we've actually got is a traditional inverse head and shoulders. So I do believe we are still going to get the bullish momentum that comes out of 1inch. I just think we get a weaker signal. The widening megaphone pattern is one of the most powerful signals. For those of you that are interested, I highly suggest reading the book, Reminiscence of a Stock Operator. It's a fictional story of Jesse Livermore's life, and he was the kind of creator of this widening megaphone pattern theory. It's really easy to find. If you want to go do your homework, you just go into the internet, you type Livermore megaphone. I'm pretty sure that will give us all the data we need. We just go into images here and boop doop. What? Megaphone pattern? Or maybe it was an accumulation cylinder. Is that what he called it? Yes. Livermore accumulation cylinder. There it is. That's what he called it. Not a megaphone. I call it a megaphone, but he called it an accumulation cylinder. So here's the Livermore's speculative chart. And what's interesting here is that these actually co-align with usually the end of phase C and into phase D and E. So technically a phase D and E, where these are the SOS and LPSs, where 6 and 7 are actually an SOS and an LPS to the back of the trading range. We have 8, 9, and 10 are the kind of finalization of that market cycle growth itself. So generally what we had witnessed is this kind of repeating pattern where the Livermore cycle will go from the spring through phase C into phase D and E, and then out of the box of phase E through the finalization of the megaphone pattern. Whereas here, we broke down through that megaphone pattern with 1inch. Now, what's the valuable data here? Well, first off, we live by our thesis, heads I win, tails I only lose a little. But more importantly, I think that, what we witnessed here is that this inverse head and shoulders became the strong signal. So if one of the ways to do that, if you are in the private group, and you would like, you have access to these wonderful charts that we created. You can go over here into the den, Wyckoff trading ranges, and then let's take a look at a few of these that we have drawn up over the last few months. So the Wyckoff accumulation ranges and reaccumulation ranges are very important. Now here's the schematic that we were following for 1inch, which is the falling wedge into the rising megaphone pattern out with the breakout, and that's how we got Solana, Avlanche, and a few others so fantastically right. Whereas here, what I think, again, we're witnessing is actually this version, schematic 3, which is an inverse head and shoulders. So if we compare these two together, where do we get it right? Okay, well, here, this looks like the left shoulder, the head, and the right shoulder. Left shoulder, head, right shoulder. Ah, okay, yes. So boom, we hit the top of the trading range and we've come back down. So phase C into phase D actually has this trick point. I do suspect that now, and a good look below the POC here, which is by our dotted line. So again, below the POC, we've fallen, which is our red line on this chart. We've created our right shoulder, bang, right here. So I do suspect what we're gonna see is a quick jump back up to around $3.40, a touch of 318, and above and up we go because this bull market is still continuing. So here, again, look how beautifully the widening megaphone pattern played out with the falling wedge into Avlanche. Now, again, what we're doing is realizing that accumulation schematics are like footprints of animals out in the wild. They're not always identical, but they're pretty close. And now 1 inch to me looks pretty much like this is what we found here. We have found a inverse head and shoulders on 1 inch, and we are just finishing the right shoulder now. Yeah, I thought we were actually going to get the widening cylinder, that megaphone cylinder. We were right on pace for it. Our entries looked good, and then it went and slammed into this right shoulder. The other thing I would like to point out here is that, you know, fundamentally speaking, 1 inch just doesn't have the juice that Solana or Avlanche clearly had. You know, these are both Avlanche and Solana have the potential to change the ecosystem. Ethereum is not guaranteed to win in the smart contract sector. Just keep that in mind. In the battle of like beta to cassette to DVD to Blu-ray to DVD, none of those exist anymore at all. They fundamentally don't exist really. There are a few places where you can find a CD player. I don't have any devices in my house anymore that have a CD player or a DVD player of any kind. So very quickly technology is replaced and then turned into archaic, I guess, memorabilia effectively. So there's a high potential that any number of these could turn into just that, a nostalgic memorabilia because of how quickly technology advances. So in general, what I like to do is know that because I'm not the smartest man in the world, I have investments in each of these. The reason being is because I don't know what the future holds, and I'm not going to pretend that I'm smart enough to get that right. But what I do know right is that one of these will. And once we see clear winners, you want to lean into that. Now, a lot of people think that Ethereum is a clear winner because it has a strategic advantage of being first mover, but that's not always the case. Where our beta tapes, cassette tapes, DVDs, well, they were all first movers. They're gone. MySpace, Friendster, Rise, all gone. So we don't necessarily know who the winner is until we see clear established domination. And although the Ethereum Foundation, and I'm sure all the devs would like to think that Ethereum has secured that foundation, I do not believe that is a correct assessment of the situation. In these times, because technology can move so quickly, I'd stay away from that. So now, what do we want to keep an eye on? Is there a way that we could invalidate this? Yes, of course, there's always a way to say, oh, we fall back down, we start to close below here, boom, market over. If you entered late here, you've got a lot of risk on the table. The other thing that you should remember is that the majority of the people that are in this conversation with us in the Bear family joined and made their entries way back here when Ethereum was between $80 and $300. So if you're new to this market and you're thinking, well, Tio, if it drops down, I'm going to lose all this money. First off, what you got wrong was showing up late. All right, so your ability to assess the market and get things right and have the ability to move around. Let's say we do start to fall down, right? There's a big gap. There's a huge gap. Ethereum could fall all the way down to $300 pretty damn easily, right? Again, there's no clear sign that Ethereum is the winner, right? So let's say you do have risk on the table. Well, there's a few ways to counteract that. Number one, tails, I only lose a little. You should really only be investing every month what you can afford to lose. Otherwise, you're playing the game wrong, and you're likely going to panic buy and or sell, make massive mistakes, and in the end of the day, end up losing out because you did not have a solid strategy. The second part here is to remember that these bull bear market cycles or accumulation distribution cycles repeat frequently, right? So we don't need to get it right exactly. You just need to be right consistently, which means buying And accumulating, I think Michael Saylor has played out a beautiful strategy for people to basically copy, which is ignore the price and just keep accumulating assets, because they're going to print the dollars into worthlessness. These dollars have no value. They're backed by a government, which is, in my opinion, corrupt and failing. Sorry, Americans, I know you hold those things in pride, but I think you got bought out years ago by lobbying, whatever nonsense. Anyways, totally different side point. This is not a politics channel, but it does lead us to the trust and faith in the government issued money or currency. Rather, I think they're vastly different concepts. The currency that the US dollar is degrading and failing constantly. Let's go and take a look at our venture capital stuff. For those of you that are in our private group, man, we've knocked it out of the park the last 2 months. We have multiple 10 and 100x. So here we go. We had SolRise. In our early entries in SolRise are already up over 5x in the last 60 days. Congratulations to that one as well. Real Fever was up 13 to 16x. Star Atlas, for those of you that jumped in on that one, I saw a couple of the private members 100x plus. Now, obviously, these things don't last forever. And what I'd like to point out is that if you're interested in the research that we are doing, we give a lot of it away for free. Look, here is SolRise, SolRise Finance. You can go back and you can look, and you can say, well, Tio, when did you start talking about SolRise? That would be great to know. Well, here it is. Here's our SolRise updates and our podcast with the team. The podcast with the team was out before they even went live. We've been getting pretty good at finding this stuff, and one of the reasons we've gotten so good at that is because what we do is a lot of research, and we spend a lot of time talking to people trying to figure out what might be the next cool thing. Star Atlas was definitely up there as well, and if you want to look, well, lo and behold, under Wu Wei, there's Star Atlas, posted 5 to 6 days before it went live. Now, one of the things is that when we find these, there's usually very little time because this market is still in a bull market phase, and the launch and the addressing of the fact that the blockchain video games, the NFT sector, the enormity of what collectibles and memorabilia will bring to this space is been entirely overlooked by the Bitcoin maximalists, or I guess Ethereum maximalists are a bit more open-minded to things like NFTs because they are built on top of Ethereum predominantly, but more than anything else, I think understanding that what's valuable to people is not always what you find valuable, and the best way to be a good investor is to understand what other people find valuable, and that way you don't miss out because you're being a little bit of schmooshy posh thinking that Bitcoin is the only way to go. One of the things I don't like about Michael Saylor is he ignores telling you that one of the ways he made a shit ton of money was buying URL domains and then flipping them eventually. Now, what he does, that's a shit coin in his mind. So he's gone against all of his prior background thesis to basically lie to you today about investments. Now, I think he's come around a little bit more, recognizing the fact that clearly he's being a hypocrite to some degree. Now, like this, they've done very well. MicroStrategies has done really well, but MicroStrategies did really well because of the things like buying NFTs for $50 and selling them for millions. That heads I win, tails I only lose a little strategy is so important. So we'll leave the last part of the episode. Oh yeah, there. Sorry, were you able to see this? Yes, here it is. Under Wu Wei, you can go. You can find a bunch of the other things we think are interesting. We're gonna have to go through here. I actually think we're gonna delete one or two of these. We started our research and then we got a little broke down. Like Vega's cool. We like Pods Finance. Mercurial has been fun for us too, but nonetheless, you know, we're trying to make sure we get it right each time. So Real Fever 13x, Star Atlas 100x, SolRise is at a 6x right now. And some of these other ones are just on research. Mercurial Finance is at around a 4 or 5x from its initial launch. Whereas, yeah, Benchmark we'll probably get rid of here. We did the research and we're probably going to move them because we're not consistently accumulating anymore. Anyways, hopefully that was helpful for you guys. Take a look at some of your thoughts and questions. I did see a super chat. Wants me to look at Vet. Okay, sure, I'll look at Vet because you dropped a super chat. Why not? Let's go in here. I'm not a big fan of Vet. I know it's got a big community. It's just never fell into my basket. I don't follow hype. If it's interesting to you, that's great. Pursue your interests. Not interesting to me. That's great because it's just not interesting to me. It doesn't mean it's not going to be successful by any stretch of the imagination. It's just means that I'm not interested in it. Therefore, I don't spend time looking at it, researching it, and or investing into it, because you generally want to make sure you're interested in whatever you're investing into. That way you keep showing up. On the daily here, okay. So we saw, again, look at the explosion of the market here from November 20th. You had a 30x on VeChain from November to May, which was just amazing. Think about the power there. And then even from August to today, 80% rise in price evaluation or valuation. This looks to me like it's hitting the top of its trading range. Hit the top and is now in its kind of backup phase. Again, just a rough estimate here. Like this, here's your spring into your backup phase. I suspect that based off what we've seen from 1 inch, that this is also going to be inverse head and shoulders pattern, just because it's a little bit further behind. And again, for those of you that are in the private den already, under the den and then Wyckoff trading ranges, you can find the different accumulation patterns that I believe are so valuable. So let's take a look. Oh, sorry, there we go. There's VeChain on the chart for you. I apologize, I had my face up there. So here's VeChain, again, from November 2020 to, was a 30x up, boom, hit this, what looks to be a reaccumulation channel. And here's the LPS, again, last point of supply, a massive amount of supply coming into the market and very limited price spread at the moment. So again, more indicators that we are in the bull market, and that this is an inverse head and shoulders, very similar to what we saw with 1 inch take place here. And very similar to our reaccumulation schematic 3, where you have a left head and a right shoulder before moving into phase E, with that peak out top into phase D. And this is kind of what confused me with 1 inch here, was that this is actually phase D here, and that your phase C is a little bit of a wider gap into the spring itself, whereas phase D has the top puncture into the trading range before sliding right back below the POC and then moving into its SOS and LPS phase. So I do believe that VET is actually performing very, very similar, whereas here you have that touch into the top of the trading range before performing the right-hand shoulder. So we'll leave it at that, although at least for VeChain, we'll look at a few more of your guys' thoughts and questions, because I know they're out there. Let's take a look. 244 of you online right now. Give us a thumbs up if you are enjoying the content. And let's take a look here. What do you think about Link this year? The same thing I think about any good asset. An accumulation strategy pays off the best. You can ignore a lot of noise if you focus on that strategy. I know it's boring. You're like, well, Tio, why would I want to watch YouTubers every day if what you're telling me is that you shouldn't listen to them? That's my point. The reason we don't show up for a show every day and inundate you with noise and news is because it actually decreases your ability to make good decisions, which should just be, hey, it's a new moon, let's buy Bitcoin. Or it's the 19th of every month. It's just that my time, I'm gonna buy and accumulate assets. That's a strategy that works, that turns any ordinary person into an extraordinary investor, so why complicate things? I'm not gonna tell you have to breathe through your nose 8 times, out through your left nose nostril 5 times, and then spin around in circles 33 seconds before the sun sets to make a good investment. Like, most of the time, what you get on a day-over-day basis is noise from the news, and it not only is often irrelevant, it makes making a good decision much more difficult because you're caught up in the bullshit. So hopefully that makes sense for those. I know it makes sense to a lot of you. For those that it doesn't, you're probably younger than 30. If you are younger than 30 and you're wondering why it doesn't make sense, maybe there's something there to like sit and think about. Let's see. Rodney says, Tio, thank you for the quality education. My pleasure. I'm happy to share my sentiments and what I've learned here. Santander says, do you sometimes look at the moving averages? Moving averages, in my opinion, are entirely retrospective use. I think that they're just more noise They are great for studying past market sentiments, but in terms of future market sentiments, they have been wrong so often. Remember when everyone is like, oh my God, the death cross has happened, like it's over, the bear market has started. Well, that was wrong. Moving averages, in my opinion, are not leading indicators. They are lagging indicators in the market. And as a matter of fact, I believe that's exactly what moving indicators on Investopedia, I'm pretty sure even Investopedia probably agrees with me. And if Investopedia and I are agreeing, well, maybe, yes, here, let's say, let's go moving averages. Let's say, calculation data points, series of subset financials, counting, moving averages commonly used in technical analysis. Here you've got your simple moving averages, your exponential moving averages for those of you that want to know. It helps determine support and resistance levels, but it is based on past prices. It is a trend following or lagging indicator based on past prices. That to me is not entirely important. Again, some people consider them to be important trading signals. I generally disagree. I've really started to love this refined, simplified version of the trading range. It just remove as much noise as humanly possible and go with the single most important valuable data points that I have, which is price and volume, or result and effort in the markets right now. So moving averages, do we have them on our charts? Yeah, and actually, as a matter of fact, if you look and I go turn on my charts, you've got one that you can get for free. This is the Bear Claw. You can get this for free by following us on Arcane Bear Trading View. We've got these stacked exponential moving averages that are the purple colors, and then your slow moving 200 and 314 day moving averages on the bottom. So here you can say on the 200-day moving average, boom, boom, we hit that, and then we bounced above, oh yay. But see how it is a lagging indicator? It in no way on the daily gave us any useful information up until it hit it. Right, and that's why both Investopedia and I agree here that this is a trend following or lagging indicator based off past prices. Not my cup of tea. Some people use them. Again, here you can actually get entirely lucky based off using things that are totally not related in any way, shape, or form. Is there value in understanding that there is a buffer and a support zone there? Yes, of course. Look how the trading range and the 200-day moving average seem to align. But there's actually other data there that I find even more important than the moving averages. So we're going to take that away. There's the Bear Claw. You can download that one for free. We also have the 3 moving averages, another one that I use frequently. Don't use frequently, but I have there if I want to look at something. There we go. But more importantly, this one, the Bollinger Bands. I think the Bollinger Bands are super important. Look here, look how tight the bands got, and see how we stayed above the middle of the channel on the daily. This moment here, boom, stayed above, 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 above. This, not a moving average, but the center of the Bollinger Band. This was a really strong indicator. And again, look, we've stayed above the center of the Bollinger Band up until right this moment. So I think over the next few days, what you're going to see is maybe another wick down to the top or the bottom of the Bollinger Band around $3,000 for Ethereum. Let's use Ethereum as an example here. Maybe even fill this gap to around 2,800 as a deep wick, because we have seen those before, and then break back above. Now we'll do the same thing with Bitcoin, just as kind of a finalization of what I think is more important than the moving averages, which is actually the center of the Bollinger Band. And we'll do it again for Bitcoin on the daily, so it's a little clearer. And we'll also maybe use the white chart. So the white line moving through the price segment here is actually what we're interested in, is our price. Oh, where are we going here? What's going on? What's going on with this green line? I don't even know how that happened. Okay, there we go. So, sorry, something happened there on the computer. Very similar here for Bitcoin. As soon as we moved above the point of control, but also the middle of the Bollinger Band, we've stayed above that. Stayed above it. Here we broke down below, but again, I bet that what we're going to see is maybe a quick fill to 42,000, and then we're going to continue higher. We have not yet closed below the Bollinger Bands here on a consistent basis. So that's a really positive sign unto itself. Once you start closing underneath the bottom of the Bollinger Band, like we almost did here, like we pushed it down real hard, but we never once really closed below the Bollinger Band on the outside. These are strong indicators for me that we are still in the bull market. So anyways, oh geez, I can't believe I went over all that, not even showing you guys. Okay. Whoops. This is what happens. I need another screen. Yeah, not showing screen share. Yeah, I see that. Thanks, guys. Sorry about that. Okay, let's quickly go over that again. Okay, here's the Bollinger Band. I'll just do it for Ethereum. Here's the Bollinger Band. Again, we stayed above the center. And then in comparison with the bear claw, the moving averages, I believe these to be less important. The exponential moving averages are lagging indicators. Again, we saw a touch of the 200 to the 300. Sorry about that, guys. I can't believe I wasn't showing my screen. So we turn the bear claw off, and then again, what I like is the Bollinger Band itself. Here, again, you can see the tightness of the band right before the spring, and then the closing above the center of the Bollinger Band, and the consistent hugging of the Bollinger Band here too. We've been below it, but for a very, very short period of time. I suspect that as soon as we close above this, probably within the next few days, we're going to continue higher for Bitcoin, Ethereum, and then the whole market will be like, oh yeah, we're bullish. Yeah, see, we told you, I was right. That's what everyone's going to say. I'm not going to say that. Even if the market does that, it means the market was right. It had nothing to do with me. I apologize you guys had to watch my face the whole time I was sharing all that valuable information I didn't go over. So excuse me. Yes, yeah. I realized I wasn't showing the screen there, guys. Thanks for that. Awesome. We'll leave it at that. Give us a thumbs up, guys. We'll see you on the next episode. We'll be back tomorrow. I think that we're going to get probably 2 or 3 days of really cool learning that comes through this finalization of the backup phases. So we're going to use that to our advantage. Awesome. Brent Smith, thank you for the $5 super chat, letting me know that I wasn't using my screen. I have to get a secondary screen here so that I can pay attention to the charts, and the conversation, and actually what I'm viewing on my screen here at the same time. Others are probably going to make that mistake again. Anyways, we're going to leave it at that. Thanks for joining us today. We're going to jump off, and we'll see you guys. Oh, and Warren drops in a $20 super chat. Thanks for that, Warren. You guys are all fantastic. We'll see you guys again on the next episode.